Ha! Senor Ortiz, we are
Hey,
live. Are you ready to kick this thing off, brother?
yes, sir. Let's do this.
Let's do it.
Welcome to the Administrators Podcast, featuring your host, Mr. Kendrick Thomas, and my co-host, Mr. Jose Ortiz. This information is used for educational purposes only.
Hey, what it do, KTTV? This is KT, and I'm coming at you live with another episode of the Administrators Podcast. And on tonight's episode, it is me live with my co-host. I'm KT, and he is
Joe, baby.
Look, man. I don't even know if it was a pause or not, but I felt it tonight, man. Way to represent, brother. How you doing today, man?
And I'm doing good, man. You know, counting down one more day till our break, man. So congratulations to everybody out there who's made it to this point. If you are in education, congratulations, y'all.
Look, man, I'm not gonna lie to you though. We just had congratulations to this point. A lot of people was already at the house today, man. I know when I drove to school today, yeah, man, I kind of planned my route, followed my school zones. Just drove straight through today, brother. It was no traffic. I was looking, man. The only kids I saw at the bus stop was ours, man. I was only one bus stop from here to there, man. I say, okay, well, I feel good. But tomorrow is the day. Big shouts out, as Jose said, to everybody who is in education. Lord, we're gonna take these 2 weeks, we're gonna recharge, we're gonna find ourselves because spring is coming. And we know ain't no home on honeymoon. It's real life after we get back. I've been working out for 2 weeks, doing push-ups, jumping jacks, waiting to get back to your classroom. So y'all be ready. Go get you some snacks, watch you some TV, some football, and find yourself over these next 2 weeks and make some good resolutions and keep.
And don't forget to trade in some stocks and options.
Look, I'm telling you, because we got this time off. So if there was not another time for you to kind of get yourself together, do your research, and get your bag, now is the time. And so that's why I'm so glad that everybody is tuned in for tonight. So much good information that we look forward to sharing with you all. Tonight is all about options made simple. Last week, we kind of got a little bit in the bag and we kind of showed up some charts and talked a little technicals. And so what we'll do tonight is kind of back up and bring the piece by piece, almost like a 101 course for the options. So we're talking about calls, we're talking about puts, the simple pieces that you need to know in the trading platform program. We'll look at TradingView. And so I don't know, Ortiz, you use TradingView?
I do use.
Yeah. So that's a platform that we both use. So in our platform program, we'll look at TradingView. We'll look at how you can set it up. Look at some of the features that it has. And it also has a paper trading function. And so as you learn things on the podcast, the paper trading is where you can go in and it doesn't take real money and you can practice your trading as you learn more about the market. So we'll kind of show you what that looks like as well. But now, anything you got to say before we jump this thing off, man? I think we get into some news.
No, man, I'm just ready. I'm ready to.
All right. Let's get into some news, y'all. Hey, so let me take some of this stuff off the screen so we can really see what we're doing here, y'all. This is damn, I'm kind of like the producer and the host. I'll just get it in. So basically, what we're talking about today, end of the year is coming. People are making projections for next year, right? And so the question is, what news are you looking at to help you determine what kind of stocks you'll buy? Where will you put your money? Which side of the trade will you be on? And we'll talk about it tonight, whether it's going up or whether it's going down. And so being able to find those confluences, or what we say, things that help you pick the right side of the trade or a better look at that stock, is always looking at what's going on in the world around us, what are the analysts saying, right? Now, remember, we don't just listen to what they say and then pick our stock. We listen to what they say as we do our other research. And so in tonight's news section, we have an article from Benzinga that talks about Goldman Sachs. And so they said, how high can the S&P go in 2024? If you don't know, at this point, Jose, the S&P is up 22% this year. So whatever you put in at the beginning of January will be times 22 by the end of this year. I think that's a nice return, brother. I think that's a nice return, man. When you just sit it there and let it stay, that's 22%. I'm getting ready to say it. All right. So what he says is, remember, we already talked about the bonds, right? So a lot of the bonds, once the Federal Reserve start cutting rates, bonds will go higher. And so we talked about this on a few shows, but what is the catalyst behind this? So right now, he said that it was 47. S&P is already trading at 47. The new target is 5,100. And why? They said the Federal Reserve is showing the willingness to hit the rate cut button. So we got a few people saying it's going to be coming first quarter. Some people saying second quarter. Nevertheless, we know that there will be some rate cuts. And so as rate cuts come, people start spending a little bit more money. Money goes into the market. Everything starts going back up, which is why they got to be careful not to cut too early, because the inflation will just get back in it. All right. So one of the key drivers behind Goldman's up revision is the Federal Reserve changing the tune. He said they recently tweaked their Fed fund rate forecast, projecting cuts in March, May, and June of the upcoming year. So remember what I said, first quarter, second quarter, they trying to get it in. They think the cuts will be coming. So they're saying by the end of the year, there will be a rate between 4% and 4.2. And as we know, right now, it's like 5.5, 6.2, somewhere up in there. So those will be some heavy cuts. But once again, what do those cuts do? They're going to push that S&P 500 up higher. So now that 22% from January to December may, if you put it right, it can be a 35% or 40%. Because remember, this is one projection, but a lot of people are saying because the rates are coming down, liquidity is where you want to be, so that when those stocks do drop, you can get in on those pullbacks. So just a little piece of news. Jose, you got anything to say on that?
No, I just, want to reiterate the fact that we actually, we talked about SPY, the S&P 500, and then SPY, the ETF that, tracks that index. And so just keeping an eye on both of those, you can actually take part of that S&P with SPY. So especially after tonight, you learn some options. You can, get your feet wet. That is definitely one ETF that KT and I trade.
Like crazy, right? Every day. Some days it's good. Some days it's bad. Okay, y'all. So please don't forget, if you are tuned in, make sure that you are sharing. Make sure you're subscribing to the channel. Make sure that you are also following us on social media, because right now, over the break, as we get ready to take a break for the holidays, a lot of the times we're going to be inside of the Facebook group going through live trades. We off, teachers. So what are you doing with your time? We're going to be on live trying to get this bag. So we are willing to kind of trade online and kind of show people how to get set up, do some things, but it'll be all inside of the Facebook group. So if you have not got locked in, make sure you do. Because this holiday, we will be taking some time out online and doing some day trading, man. We're going to see how much we can get. I'm going for 10, man. I'm going for a smooth 10. All right. All right. So what we'll do, we'll take a quick break. Then when we come back, we have the S&P 500 heat check. So now remember what we said, this heat check is going to go each week, because each week things are changing. And so we do have some moves that have been made as far as changes. And so if you've been following each week, I want to see if you have the same aha moment and things come clear. So stay tuned. We'll be right back.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
Okay, y'all, welcome back to the Administrative Podcast. I'm KT, and this is
Joe, baby.
Oh, come on, man. Where was the energy on that one, bro? That was sound like a bro. We are not in prayer. I mean, it's not Wednesday, bro. All right, so look, y'all. Right now, I know y'all see it on the screen, but please don't think that it is not coming. Wait a minute. Woo! Let's do something for the heat check. Really? This heat check is going to get pretty rough here. All right, so let's see if we can make this a little clearer for the people in the back. So I'm just going to keep this off for a little while, y'all. Okay, if y'all have trouble seeing this, please let us know inside of the situation here. Oh my God, I done took it all off the screen now. All right, there we go. So in the heat check, let's just go through this and kind of look at what we got going, right? I always want to show you all the S&P 500 heat check. I always want to kind of tell you what it's for, just in case we have somebody new that's coming in. So we'll start right here. So this is called a heat map, right? And so this is a visual tool that offers valuable insight into the market trends and sector performance. And so when we say sectors, look, technology sector, semiconductor sector, right? Communication services sectors, consumer sector, healthcare. So all of these are sectors of the market. This heat map tells us basically where the bag is and where the bag ain't. And so if you go through this, green usually indicates strength. So we look at our Googles, we look at our Amazon, which, hey, I'm not going to say nothing. All right. While the red suggests weakness, right? So we got a little weakness in Apple. Apple has been kind of on a tear, but looking at it start to cool off, right? Till we get down here, BlackRock. So we're looking at asset management, housing. It's getting kind of rough down there, right? So if you're getting ready to buy a house, you might want to kind of look at what's going on. But this the heat map helps you kind of see that. All right. Understanding these visual cues can help you make informed decisions about the sector rotation and where to allocate that portfolio. Jose, what stands out to you when you see this, man?
Well, I think when we think about Apple, Tesla, some of those semiconductors like AMD, what we noticed last week was some of those were on the rise. Remember what we've been talking about: pullback. You don't want to go more than 10% down in any given day or in any given period. Then you know more than a pullback. But I do think that with the Apple being down $1.80 today, your Tesla was down. Tesla started off strong in the morning, but I think that these red, indicates that we were cooling off from what we were the previous week. Not a sign of panic yet, in my opinion. If you look at the bright red, like those at the bottom, where the asset management, we can start to think about some of those. But if it's healthy to have a pullback. It's healthy to be a little red, and you can reposition yourself, on days like that, and try to get in or buy more. Double down. Just remember not to get too greedy, because you don't want this to be the start of a dramatic downfall. And then here we are caught up in, okay, we got in, it was down, but now it's going to keep on going. So we have to know when to buy it.
All right. I agree with that, man. So this is just a little bit of our heat map. Let's look at what was going on last week. Who was up last week? All right, so still pretty much the same players, right? Today's performance. But now look at this. What green do you see here? Is this some light green, right? I mean, that tells me everybody in these light greens is getting money. Bam, look at where they at today. So now, if I just look from 1 week to this week, I already can tell, whoa, as Jose just said, it looks like things are cooling off, right? Because a lot of the green that was here, this thing was on fire. We talking money. Look at this number money. Money. Did I say money? What? I'm gonna say it again. This was nothing but money. But look, now we're getting a little bit of hesitation. All right. So that is our S&P 500. Please remember, you can go find this. All right. So now we're going to, let me take that off. And I want us to look at our, let's see here. Let's look at our fear and greed index. Okay. Check this out, y'all. Where are we this week? I will just sit that right there so that y'all can kind of check this out. So, as you know, and it says it right here, the previous close, we were at greed. 1 week ago, we were at greed. 1 month ago, we were at greed. Now, look what's happening. So, the market just moved over to extreme greed. In 1 week, I've seen all my bright green stocks who were getting money start to dulling out, which means they're losing steam, right? So this, once again, this is your fear and greed index. And so for somebody who doesn't know what this is, basically, all this doing is just telling you what is the sentiment of the market, right? How does the market feel about what's going on? The emotional state, brother. So what this does is help you understand whether the market is overly optimistic or pessimistic. Right now, I'm gonna say they're a little overly optimistic, man. Because everybody thinking there's so much money out here. And what happens when that happens? That's when you start getting FOMO. So now everybody's saying Santa rally about to come, which I found out is only 5 to 7 days. So it's not like this is a long period. But now they're saying, everybody is saying, I'm about to miss out. We got all this money coming into the market. Let me jump in so I won't lose nothing. And so the people who are not looking at that heat map to know things are cooling off, they going gung-ho over here.
Sure are.
Because they don't know. And then who gets the hole in the bag at the end? Y'all better listen. I'm telling you. Let's rock this thing. Anything you got to say about this one, Jose?
No, just real quick, like KT was saying, you got that extreme greed coming up, we're flashing the beginning of it. You don't want to hit that FOMO button, the fear of missing out. But be careful with Christmas coming up on a Monday. If you do happen to open any positions, or if you are in any positions that you feel comfortable with this week, profit taking, take profits, because next week is Christmas. Market is closed Monday, and we are starting the end of the year. And so just remember, like we said a couple episodes ago, at the end of the year, people sell because they want to cut any losses that they have, and they want to start fresh in the beginning of the year. So if you're going to make any quick moves this week to get in, don't anticipate it lasting as far as going up into next week or even the rest of this week. So be careful with opening any positions, after, midweek or so. I do think we continue a little bit of green tomorrow, but just keep in mind that after Friday, we are closed on Monday for Christmas.
Man, and it will get rough. We may start selling out, man. It's coming soon. So y'all see the keys.
Save that money.
A lot of people not looking at it. We see the keys, what's happening. So now what we're going to do is we're going to go to our last piece of the puzzle on when we're just doing our full heat check of what's going on in the market. And so that is our VIX. Now, this is going to be another indicator. So let me go over here to my notes here for this here, because I want to make sure. So the volatility is a key aspect of the market dynamics. It's crucial for traders to comprehend its implications. The VIX, or the volatility index, reflects market expectations for future volatility, how much it is going to go up and down, right? That's it. Sometimes it's going to go up and down more than often. So a higher VIX often corresponds to increased market uncertainty. All right. So I wanted to make sure I made that point. So now let's put this all together. We had our S&P heat map. All our stocks that are going super green, what are they doing? They're dulling out. They're slowing down, right? So now they tell us, okay, what's happening? Are we coming to a stop? Now we move over to our fear and greed index. Now we seeing it move from greed to where it's been for our full show over to now what man, what was it? What was it? Extreme greed. So now it's moving over to extreme greed. So bam, that is another sign people are now just piling in, and somebody is finna get ready to pull the rug because money is coming, and institutions they got in way lower than just now. So now once all this extra money come off the sidelines in, boom, they gonna pull, stock plummets. Somebody is finna be left holding the bag. But we get the S&P, we get the fear and greed, then we come to our VIX. So remember what we said about the VIX. This is the volatility that shows uncertainty. Green going away, fear and greed moving over to extreme, people getting kind of scared. Now people saying, we don't know what's about to happen. If you look at this, we are almost at all-time highs. If you look over this. So now what's about to happen? People finna start getting scared. And if you know anything about the culture, it's not the person that's not afraid of you that's not going to do something. It's the person that is afraid of you that is going to make sure they take care of you. So when people start getting scared, just know that is never something good that's coming. And so volatility is coming into the market. So be careful. That's all we're saying. But today was just a way for you to put together how heat maps, volatility, and the sentiment indicators are essential for your trading arsenal, right? And so over the break, take the time to familiarize yourself with these tools, and remember, well-informed trader is a confident trader. So every week we got the tools. Go back, replay them, kind of look at these for yourself, and get in your own bag. Jose, anything you got to say before we close out the heat check?
I just think that it's very important that you understand that heat map, this VIX, the fear and greed, especially as we move into options, because as you'll learn from tonight, options have expiration dates. So like he said, you don't want to get caught up in the middle of an up down, situation in which you've got all these expiring contracts that, haven't made that target price yet. And so, but we'll go into all of that in a minute. I just want to make sure that everybody understands the connection between this market, even more so with options as we get into talk about those.
All right. Okay, y'all. So any comments, any questions about that, please make sure to put it in the comments section. What we'll do, we'll take a quick break. And when we come back, let's get into these options, y'all. Because the rest of, so I hope y'all know this all like a puzzle that goes together. So when you got options, the fear and greed, the VIX, all those pieces are so intricate because options go up and down, as you'll learn, very fast. So you have to be researched. You have to be confident in what you're getting into. And as I just said, the only way to be confident is to be informed. So make sure you get locked in, because the rest of the show is going to be very vital to how we're going to get the bag for 2024. All right, y'all, we will take a quick break, and we'll be right back.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
All right, y'all, welcome back to another episode 7. 1, 2, 3, 4, 5, 6, 7. Episode 7, man. Of the oh, look, we already said next season we coming back with the money printer. We coming back with the ching sound. I think Jose, I'm gonna try to find the money hoodie, man, so we can get this thing going. All right, but y'all, welcome back. So now we're about to get into the options trading, and so really just breaking down 101 what this looks like, how you can get your bag. And so for that section, we're gonna debut the new intro for this segment with Ortiz. Let's do it. Woo! Look, if that didn't turn you up real quick, look, man, every time I get in the car with Jose riding back from me, I always hear like some light rock or something going on, except for the time I heard Easy. But that was a different story, man. We was riding that day. But besides that, man, it's always been some kind of rock. So I said, how can I get my boy turned up before we get into these options, man? So without further ado, man, let's run this thing, brother.
All right, everybody. So welcome to this edition of the Ortiz, breaking it down. So here we go, y'all. We are going to talk about options. We're going to make it easy, understanding the basics. I'm going to go a little slow so that we can actually focus on what these options are, what they look like. You'll see some examples on the screen. So please make sure pen and pencil, you are ready. So options, what are they? The definition of options: financial instruments that give you the right, but not the obligation, to buy or sell an asset at a predetermined price before an expiration date. Ooh, that's a lot of words. So,
damn, it's a lot of words.
So someone who's coming into this options, man, that sounds a little scary. So now let me break it down for you. So simply put, options, they give you the right to buy or sell contracts for 100 shares of an underlying stock. So remember, we talked about the stock. We talked about buying 100 shares to get your money's worth. Well, a contract gives you that opportunity. And that's what an option is. It's contracts. So each option has an expiration date. So that means they can be bought or sold anytime up to that expiration point. So you have options. It's a contract to buy 100 shares. You're not really owning those underlying shares, but you have the options that give you the right to buy and sell. And there is a, if you quote unquote, deadline or an expiration date. The price that you pay for these options is called a premium. So as you get familiar with options, as you hear people talk, when we talk about premiums, that is the price that you pay. That is the price that you sell it at. That is the money that involves when you are buying and selling these contracts. Each option comes with a strike price. The strike price is the target price that you wanted to hit. We'll go over that in a minute. And it just simply means your target, whether that's going up or whether that's going down, you will always have a target price, which is called a strike price. So our first type of option, the one that we do most of the time, is a call option. As simple as we can get it, a call option is when you buy an option when you believe that the stock is going to go up. Let me say that again. When you buy an option and you want the stock to go up, it's called a call option. So you can hear us saying, well, we've got this many calls of so-and-so. That's because we want that option or that underlying stock to go up. Okay, so call options mean going up. Put options mean that your options are being bought when the buyer believes that the stock will go down. So you put it down, put that over there. You are going down. And so believe it or not, this is what makes options so fantastic, is the fact that if you believe Microsoft, Apple, SPY, if you believe that it's going to go down, get you a put option. You can always play the market when going up and going down. So before we move forward, put options are options that you buy when you believe that the stock will go down, and call options are when you believe that the stock will go up. So now let's get into some technical terms with options as far as what you see when you start buying them.
Hey man, you said that first put hard as hell though. You said that first put hard as hell. Like, you're very excited, man. All right, here we go. Let's go.
All right, so here are the components of options. So we have our ticker symbol. from previous episodes, episode 1, baby, ticker symbol is the actual stock in question or the stock that you are looking at. Your strike price is the target price that you want that stock to hit. Thinking about that strike price, it's a relationship to the actual stock itself. And that relationship can either you want it to go up or go down. So when you're thinking about that relationship and you have that stock price, what do you want it to do? Do you want it to go up? Do you want it to go down? And then what is that magic number? What is that target? That is your strike price. And then the big one is the expiration date. It's very important that you understand that every option, whether it's a call option or a put option, each one of these options have an expiration date. As I said before, you can buy and you can sell at any time within that expiration date. But just be careful, you don't want it to expire. You don't want them to actually assign the stock to you, especially if you don't have the money to cover it. And we'll go that into, when it's time to sell your options. And then, of course, the premium, like I said, is the price that you pay for that option. So to recap, you got your ticker symbol, you got your strike price, you got your call, your put, whether you want it to go up or down, you have an expiration date, and then you have a premium. So let's look at that real quick. So strike price, it's the agreed price at which the underlying stock can be bought or sold. So that is, like I said, the target price. What is it that you want that stock to get to? So Microsoft, 375 current price. Do you want it to get to 400? Do you want it to get to 380? Or do you want it to go down and think that, okay, maybe we can go down to 360 within the next month or two? So your strike price is always the target price that you are looking for. The relationship, will the stock go up? Will the stock go down? That is the relationship that these options have with that underlying stock. If you want it to go up, like we've been preaching, call. If you want it to go down, we got to put. Remember those two terms, a call and put, for when you want to buy to go up, and when you want it to buy to go down. Your expiration date. So the expiration date is important because it's the date that the contract will expire. So for example, if I have a contract that expires January 19th, after the 19th, that contract can no longer be bought or sold. I can sell it. If I own it today, I can sell it anytime before January 19th. Whether I've made money or whether I've lost money, I have until January 19th to sell it. If January 19th approaches and I have not made my target price, most platforms will sell it for you. Now, it may not be worth maybe $1 or so, but they'll sell it for you. However, and here's what gets tricky. If you made your strike price, first of all, the question is, if you made the strike price before the expiration date, why do you still own it? However, some people, not to mention any names, may want to hold on to it for a little bit longer. So if you get to that expiration date and you have hit your target price and it is now worth a lot of money, the platform will probably assign you 100 shares of that stock. So that means if Microsoft is at 370 and it hit your strike price of 370 and you do not sell, at that expiration date, they will assign you 100 shares of Microsoft. And if you don't have the money, if you have a margin account, they may put it in there where you.
Look,
So
I would just tell y'all. Hey, I would just tell a quick story, man. I had some options, and that was happening, and it was coming close to market close. Dude, these people never called me before, ever, bro. They called me and they said, "Hey, these are about to exercise. Are you sure this?" I was selling it as they called, but still, it was just the fact of if it's $375 a share, they are going to charge you that times 100. and it's gonna be a whole crazy situation because they want 37 off the top. And so that was what was about to happen. It was just about to go down, y'all. But luckily I did get saved. But man, come on.
Yeah.
But yeah, I just want to tell that story, man, because that expiration date is real.
Yeah, that's a good point, KT, because
Yeah,
most people won't have that much money, and if you did, you would have bought 100 shares to begin with.
yeah.
But just remember that expiration date in the event that you hit your target price. Well, let me just say this: there is a target price for a reason. So if you hit that target price in the amount of time in which you set forth, please, please, please take your profits, because you don't want to hold it. Because then the other issue becomes, if you're really, really close to the expiration date and you've made all this money, you have to find a buyer.
Yeah.
So who's going to want to buy a contract that's going to expire in 2 days at an insane amount of money? If you've made that money, take your profits. Don't risk it. Don't wait to the end of the expiration. You can sell anytime. That's the bottom line here. You can sell it at any moment you want to, whether you've made money or lost money. You just want to get rid of it. You can sell it before the expiration date.
Come on
So
now.
in a minute, I'll show you some samples, but a premium price is a price. Most of them are in dollars and cents. Now, remember that premium is going to get multiplied by 100 because you are buying 100 shares that are included in that contract. For example, if you go into any platform and you see a 0.47 to buy a call or to buy a put, that 0.47 doesn't mean you're going to pay 47 cents. That's 0.47 times 100. So still you're paying $47 for a call or for a put. And if it's $1.50, then you're paying $150. And I'll show you an example of that here on the screen as we go through that. So here's an example of what we were talking about, everything put together. So at the top of the screen, you see where it says Microsoft's current price is $369.85. That was at the time of this, when I put this together. So if you look at all the components that I just talked about, the first one is a call. So it's a call that expires on 1/19/24.
Mm.
So I want the first one, I want the price to go up. Well, right now, the price is $369.85. By January 19th, I want it to go up, and I want it to hit 375. So our ticker symbol, Microsoft MSFT. Our strike price is $375. The relationship is I want it to go up, so it's a call, and the expiration date is 1/19/2024. That is roughly 40 days or so. So in 40 days, I anticipate Microsoft to go up to 375. Now,
Hold on, Mr. Ortiz. Hold on real quick. We had a question. So she said, so regardless, it is for 100 shares. Yes, whether you're doing a call option or a put option, either way, it's 100 shares and you're bidding for it to go up or down. Okay.
so the next, well, let me go into the put real quick. So the next one is the same thing, but now we have a put. So we have our current price. Our relationship is that we want it to go down. The strike price now for the put that we want is 365. Still Microsoft, and it's still January 19/24. But now I've got a put option, which means I want Microsoft to go down. So we always have our ticker. We always have our target price or strike price. We have what we want it to do, whether we want it to go up or down, and then we have an expiration date. This is what it's going to look like no matter what platform you go to, TD Ameritrade, Webull, Robinhood, Fidelity, everything has your ticker, strike price, call versus put, and then an expiration date.
Yes, sir.
So now we have different types of options that we really don't need to worry about all of them, but I want you to be familiar with what they are. Most stocks or most options have 1 day or daily expiration date. So you have a 1 day until expiration. That is for a lot of your day trading. So SPY, for example, has contracts that expire every day. So they have daily calls and daily puts. Not every stock has that opportunity or that option, but SPY, all the different ones that deal with the actual indexes, S&P 500 for SPY, QQQ, the NASDAQ, your Dow Jones, those have daily expiration dates on their contracts. Most stocks that are traded on the NASDAQ or in the market have weekly expiration date. So we have 7 days out in between each cycle of calls and each cycle of puts. Most stocks expire weekly. They also have monthly stocks. So you have stocks that go out a month. So every stock is going to have a monthly option that expires in a month from the date of the purchase. So we'll also show you that on the header, one of the pictures that we have. So, your monthlies, your weeklies, I really like to do monthlies because it gives you 30 days, for any type of price movement. Sometimes I'll get, like if a stock was really, really down and beat up, I might get into some weekly options because I think it's going to hit here pretty quick and I have a week, but I only have a week to make it happen. So that's why I like doing the monthly ones because I still have a month to sit on it and see what it does. When I feel a little good, I'll go in there and do some 1 day till expiration dates. KT's more familiar with that than I am. I don't like to do that because man, I'll lose my.
Hey, look, man. Say y'all. Look,
but
y'all.
I will have to say, and KT, we've been talking about this for a while. My favorite one that I've done over the years is the leap. Leap is if you're long term and you're looking to buy contracts that expire 6 months from today or longer. Some of them will expire in a year, 2 year outs. If you catch the market at a good downturn and you buy some contracts that are 6 months out, or a year out at a really good premium, man, you as you get closer, you can start to chip away, sell a little bit. If you buy more than 5 or 10 or whatever you bought, you can really start to unload, take profits, buy a little bit, and get into some other stuff. So I like doing leaps.
Hey.
I did them during COVID. I did them during when this inflation hit, and I did some back when SPY was around 408 in October. Today, SPY is at almost 480. So my leaps expire in June. So right now, I'm doing okay with those. So, might be time to start taking profits here pretty soon. But hey, I got till June. I got some long June calls for SPY. So those are the different types.
About 1 minute, Mr. RT.
Okay. All right, keep going.
Yeah, we got about 1 minute left.
I go left. Keep going. Next slide. Okay, so when do you sell? Well, as I said earlier, you can sell at any time you want to. The first one is when you make gains that you're happy with. For example, if you are happy at 20% gains, sell them at 20%. It's your money. You've made it. You sell it when you want. When you have a loss, remember, like KT's been talking about, have your stop loss ready. If you have a 10 to 20% loss in an option and it expires soon, get rid of it. If the stock hits the target price, heck yeah, you want to sell. So those are dollars that you don't want to let go. And then definitely, like I said before the stock expires. So I don't think we're going to have enough time to get into these other technical terms like the Greeks and all the other stuff to look for when you buy the options. So this is a nice little overview of what options are, your calls and your puts. So, when we continue with our, when we come back from the break, we'll definitely get into looking at those Greeks and looking at different indicators on what you're looking at when you buy your stocks.
Come on, man. Come on, man. Look, man. Look, y'all. Oh, look, we went back in the lab last week. We listened. We said, hey, okay, man. We went too technical on these boys. Let's come back out, bring it in fresh on the money. And I think it couldn't have been no better, man. No better, bro. Everything was broke down. we understand a little bit more. And I tell y'all every time it's so awesome going through these because we get to all share inside of that learning, right? And so you always learn those small pieces as we go. What we'll do now, we'll kind of close out with our platform probing. Tonight, we'll look at trading view, kind of look at some of those things Mr. Ortiz talked about and how you can use this trading view to make sure when you in that option, what's happening with your money. We'll be right back. All right, y'all, let's get into this trading view platform. Oh, wait a minute. Wait, look, y'all. Y'all thought it was gonna happen without the intro. Not. All right, welcome back. We are on the final leg of the Administrators Podcast, and tonight, in our platform probing section, so we went through Robinhood last week. We went through my account in Merrill Lynch, but due to not being able to hide my balances and my transactions, we're gonna move on to a new platform. And so since we couldn't do that, then we'll just kind of go through a little bit of the trading view. So this is tradingview.com, all about stocks. What you can do on TradingView is really go in and build your list, kind of look at your charts, kind of make this the command center for all things trading, right? And so let's kind of go through our home page. And so I want to be able to, let me close this off. So this is the home page, okay? Wait a minute, this ain't the home page. This is the home page. Sorry about that, y'all. Just get my news from there too. But this is the home page of TradingView. Remember what I said, tradingview.com. That is the website. You can get in there for free. You have a few limits, but you can get in for free. So you can definitely go in and set your chart up. If you look here, it gives you all of the indices. So we got our S&P, our NASDAQ, our Dow, our Nikkei. So all of those, and then if you see, you can go over, look at specific stocks, crypto, Forex, futures, your bonds. So being able to go see all of those pieces. Up here, they have their products, screeners. So we'll talk a little bit about screeners. I'm learning how to use those myself, which are very helpful. Jose, you ever used screeners before?
I've used screeners on Thinkorswim with TD Ameritrade.
Okay. I'm just getting into the screeners. Now, the one thing I like about TradingView is not only are you kind of working by yourself looking at this, but it also gives you a community of traders that you can connect with. And so we'll get into a little bit more of that. Your news, brokers, just in case you need to find a place where you can trade if you don't have one. And, of course, we always have the more. So over here, this is where you can get into your charts, right? And so let's say, for instance, I want to set up, what do you call it? Just a ticker. I can go here to my box. You see right here, let's say I want to look at Delta Airlines. I go over here. Now, Delta Airlines is pulled up, and that is Delta Airlines. Now, it just showed me information about Delta. So I get their financials. Remember what we said, always about looking at the information, right? Because we want to research that company. So who is the head of that company? Do they make good decisions? What kind of finances or what kind of products? Do they have a moat? How much debt are they in? All of these things that we get to research right here at our fingertips in TradingView, right? So we had this a little bit hint of this inside of the Robinhood, but like right now is when we coming into that real. So looking at the Delta Airlines. So now what we want to do is go over. We've done our research on the company. Now let's go over and look at the chart. My God, where is the chart, man? Okay, bam, there go the chart right here. Woo! We're not gonna get into the chart. I just wanted to kind of show you what the setup looks like on TradingView. Is it showing my chart? Okay, hold on, wait a minute. Okay, what we'll do is, all right, let me get back into a different screen. My God.
Oh,
Do you see that, man?
Oh, yeah.
Woo, look. This is TradingView, people. So don't get caught up in the charts. We're not going to too much get into that. I just want to show you. Over here is my watch list. If I go back here, these are my alerts. We'll also talk to you about how you can set alerts. So right here, I was looking at when SPY crossed over a certain number. So what it did was it just sent the toot. It's crossing over that number. So that's what we'll do. When PayPal was crossing the AVWAP, this is your data window. So kind of letting you know about the opening, the closes, anything you need to know about that stock. Yeah, all of these just different indices, different exchanges. So this is kind of like your toolbar where you can go over. I usually keep mine on my watch list. Over here is, let me see what's the official name for this stuff here. So this is the charts, right? So we're clicking, looking inside of the charts. And what this does is gives you information about it. So right here are the indicators that I use for my charts. Once you learn a little bit more, you'll be able to set up indicators for yourself. But what these indicators do is they help you know when to sell, when to buy a stock. So that's what I like about TradingView. You're able to go in and set up indicators that kind of tell you a little bit more. On the side over here is kind of all your drawing tools. So then when you get ready to draw like a trend line, you say, I want to say this stock was going from here, down to here or something. Oh, well, like I can't do it right now. But anyway, those are trend lines, right? You come in, you got your angle, you raise. So you'll learn a little bit more about that. But that is something that TradingView has in the artillery or the arsenal, right? Now, when you want to customize your charts, what I learned about was you can go over here and this is how you can do it. So I can do two charts side by side, right? I can go over here. Let's say I want to do them up and down. Come here. Oh, hold up. Wait a minute. You got to pay a little bit more for that. So what? Look like we're going to be stuck over here, y'all. All right. But the biggest thing is once you get into, the more features, the more you pay, the more features you get. I think I am very, very on the cheap package. I may pay about $15 a month. But it still gives me 5 indicators. So very great tool, and we will use this tool throughout as we start getting into options, as we start getting into candlesticks. Let me go back to my one screen chart here. So as we start getting into candlesticks, I want you all to kind of go in, set up your TradingView account. And so that way, when you come in, you can kind of follow along. You can kind of know a little bit more about what's going on with the stocks. And how you can make that program work for you. Once again, that is tradingview.com. If you can, go set up your account and then be ready to rock with us because we'll finish up talking about the options that Jose talked about tonight. But then after that, we're going to start going into how to read these candlestick patterns, right? And what story are these candles telling us between the red and the green, between the tall points, the low points. All of this tell a story. And so coming up, that's how we'll kind of learn. So I want you to be able to set up your free account in TradingView and then get locked in. So when we go through these, you'll be more prepared. Anything you got to say about that, Jose?
No, just if you have any questions about what we talked about, TradingView, I have the free account. So there is a free version. And I use it and it gives me 2 indicators that I can look at on a chart. I use it to read buy sell signals, but when it comes to reading my other charts, I really like the Webull platform on the desktop or on my phone. I like to look at my TD Ameritrade. But TradingView is available in app on the phone. And like I said, if you get a free account, you get 2 indicators to look at. If not, you don't want to use either one of those, you can still get the basics of what your chart is with candlesticks, and that does the trick too.
Yeah.
So
and one good thing is like I say, the biggest one though is soon what we all gonna start learning how to read is this AVWAP. Right? So y'all just get ready because that's what we're gonna learn. We're gonna learn the importance of, you see how all these just dancing across this line right here. We gonna learn the importance of finding that line so we'll know how to look at our money. So just hold on. But right now, the call to action is really just get you a trading view set up and be ready for when we get ready to move on these options, man. All right, man, I think that was it for that, brother. So what we'll do, we'll take a quick break, and then we come back. We'll give our final thoughts, and we'll get out of here, man. Y'all stay tuned. Yes, sir. Welcome back. Administrative Podcast. I'm KT.
And JoJo.
Hey, we still in the game, y'all. So we're about to get ready to close this thing out. I want to say, everybody, if you have not subscribed, like, share it, make sure you get tuned in. And also jump into the Facebook group this week or over the next 2 weeks. We probably go live in there, do a little trade and do a little videoing so that we can make sure that we just kind of jumping in the bag. But also, we will be back. I think we said January 8th.
January
8th. So we'll be back that week. We'll take some time out for the holidays on those Mondays since Christmas and New Year's fall on that. But make sure to get locked in with us on social media. Any closing words, man, as we get out of here?
No, I just, think about what we talked about with those options, calls and puts. Start thinking about, getting, diving into, using those to start making some money with the options.
Hey, calls and puts. Man, if you would have had a put today for Tesla, oh my God. Whoa, that thing was dropping like a hot ice cream. No, yeah, like a hot. Y'all know what I'm trying to say. All right, man. Well, look, y'all, get informed, right? The biggest piece about this is do the research. Kind of go back and look at these episodes. When I tell you the bag is within what we saying, I wish people just knew or just really was able to take heed to how serious this is, because I'm telling you, man, people is out here making 20, 30,000 a day, right? 15,000 a day, right? I done seen it. I done done it. So I know that it can happen, but it got to be the right information. So I mean, you got to know what you're listening to, know what you're doing, and then you can get the bag. All right, y'all. That'll do it, man. Episode 7, Administrators Podcast. We will see you all January 8th. This is KT.
And JoJo.
Signing out. KTTV 100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.
KTTV.